Here, we're going to go to the invoice, imagining that we're going to enter an invoice. We want to do the invoice related to the sale of an inventory item, because that's going to be the more complex type of invoice. So up top, we've got the client or the customer. I'm going to say Anderson. We already have Anderson here, so you can start typing it in, then it'll populate, or you can add it up top. Tab, and everything populates, so that looks good. So we've got the email address, which is commonly necessary if we're going to be emailing, which more and more is common if you're in a situation where you're sending out the invoices. We've got the billing address, the terms. We set our standard terms to be net 30. Remember that you can change the terms for an individual customer, and you could set basically your standard terms. That means that we want to be paid within 30 days of the issuance of the invoice, which I'm going to say is on the 16th. So we issue the invoice on the 16th, we'll say, and that means the due date will be 30 days later, February 15th, 2023. The invoice number populates automatically, so that's good. We've got the location of the sale, which is going to be standard and necessary because that's going to be used to calculate the sales tax. So it's picking up our store location that we set up by default. We're not going to be adding any tags. And then down below, we've got the products that we're going to be selling. So let's add our items. So we have them set up already. We're just going to imagine they come up to the check register or something, or they're going to tell us what they're going to want. We'll populate the invoice and ELP. And so we're going to say ELP tab, description populates. We're going to say that there's 5. Notice it gives us a nice little thing, quantity on hand and quantity on purchase order. So I'm going to say that we want the 5 of these. And then the rate is going to be 500. That's going to give us the 2,500. It is taxable. We set that up when we set up the item. Now the tax is going to be applied, that tax being the sales tax, the usage type tax. And then an EPR, we're going to want tab. And that one is going to be, we'll just say one of those, 550. And that one didn't populate as taxable. I'm going to check that. It should be a taxable item. I'm going to check my items over here. Okay, so it should be set up as a taxable item. Okay, and then the next one's going to be an EPSH, and we'll populate that one. And we're just going to say that we want one of those. So that looks good. Okay, so that looks good. So that comes out to the 3,450. Then we have the sales tax, which is populating by location. And we put our location in California in Beverly Hills for the practice problem. That's where it's calculating then the sales tax. You can adjust the sales tax if you needed to for whatever reason by going in here, and you can override the sales tax. So it's populating. You can see the detail in here. You can override it. You have to give it a reason. I'm going to close this out and say, hold on a sec. Do you want to leave without saving? I'm going to say, no, let's close it out this way. And then say, yes, I want to leave. And then I also have included this 5% rate. Now I'm going to use the 5% rate to have just a generic problem for the sales tax. That's the idea. You can change it here if you added that 5% rate, or you can change it here by adjusting the math if you want to match out with our practice problem. I'm going to right click on the tab to the right just to show you the sales tax tab and see where you can add that information. So you can go to the taxes on the left hand side. I believe it's the same under the business view. And then you've got your sales tax tab up top, and then you can set up your sales tax settings. And I set up this other rate down here at just the 5% as another option. So it'll be my generic 5% tab. Okay, closing that out, back to the tab to the left. What's this going to do? It's actually fairly complex of a transaction, even though the data input's fairly easy. It's going to increase the accounts receivable because it's an invoice. The other side's going to go to sales. It's going to increase the accounts receivable for the full amount, by the way, plus the sales tax. The other side's going to go to sales driven by the items, which are telling it which income account to go to, but it's only going to go up by the 3,450, the amount we charged. The sales tax, which we're imagining isn't us charging, therefore not income, but we're just the tax collector. That's actually the tax from the state, local government to the customers. That's going to go to a payable account for the sales tax. And there's going to be a decrease in the inventory driven by the items we sold, and cost of goods sold, the expense account for us consuming the inventory, is going to go up for amounts, decrease to the inventory, increase in our cost of goods sold that aren't on the invoice, but known by the system because we put them in place with the items. So the impact on the income statement, increase to income, $3,450 minus the increase in cost of goods sold, which we don't see on the invoice because it's driven by the items. We'll check it out when we record it. Also, there's going to be the sub ledger for the accounts receivable impacted for Anderson Guitars, which will be tracking by customer, and the sub ledger for inventory will go down in terms of units as well as dollar amounts. So actually a lot going on. We could add a message down here. We can have an attachment if we need. We can cancel, clear. We can print preview. Let's do that. Let's print preview the report because oftentimes we'll email it. So this is a report if you're doing invoices that a client will see. So you might want to customize it. This is a customizable invoice. So we might go into those options to do that later to make it look nice because it's not just an internal data input form. And then you can make it reoccurring. You can customize here, and then you've got your more options to copy, void, delete, transaction journal, and so on. So let's go ahead and save and close.